Bang. Welcome back to 3 at 3, my friends. I'm sorry, but I am once again on the road traveling, and travel times being what they are in much of the country. I was challenged to make it back to the office in time after a couple quick meetings. So I'm only able to come to you with my voice and the slides that Jon has put together. So with that said, let's start today's 3 at 3, which, by the way, we're going to do a little victory lap for both AMD, which we talked about on 3 at 3 last Friday, as well as Peloton. Actually, AMD might have been yesterday, but Peloton, I'm pretty sure, was last Friday. In any case, both of those stocks, take a look at them today, folks, because that's why we trade options. We get a defined amount of risk, and we get a leveraged return. Even though Peloton has moved 20% today, we will do far better with our option trade at more like 200%. And in AMD, which is likewise giving us a fabulous return today. But let's get into some new option activity that is unusual. First one I'm going to start with today is a longer term trade. It is APO, that's Alpha Papa Oscar. 72.95 was where the stock was trading. They bought 3,700. That's 370,000 share equivalent, folks, because of that leverage I spoke of. June's 75 calls. So 3,700, June 75 calls. They paid about $460 a piece for those. If you multiply $460 by 3,700, you get an idea that, yeah, that's a bit of a big trade. And they're controlling the stock, a $73 stock roughly, from 75 to infinity and beyond. So that's the first of today's 3 at 3. Second one we're going to hit is one of my buddy Jim Cramer's favorites, Bristol Myers, as Jimmy always says. And BMY is a $71.47 stock. And guess what? With only 2 days to trade, they're buying the February expiring 70 puts for about 50 cents. So the stock's over 71. They're buying the 70 puts. It's a bearish bet because, again, these are puts. And they're buying those ahead of the earnings, which are tomorrow before the opening. So you have 1 hour almost, about 45, 50 minutes to trade ahead of that earnings report. Does this mean that the stock has to go down? No, but it's a cheap shot. And if indeed Bristol Myers warns or has some issue, this could pay off bigly because, again, earnings are tomorrow. And the stock could easily fall by $1.50 or more, making these 50-cent options worth $1, or, if it goes below 70, a lot more. So that is the second trade. BMY 5,200, which is 500,000 shares short at the 70 strike in the puts. And these puts expire this coming Friday. Lastly, I'm going to give you SIRI. That's SIRI. SIRI, they bought 20,000. That's 2 million share equivalent, folks. 20,000 of the February 550 puts for 10 cents. Now, yeah, that is a really cheap shot. Does the stock break down? Perhaps, but somebody wanted some protection. They were not selling these. They were buying these ahead of earnings, which are also, just like in the prior trade in Bristol Myers, these earnings are due tomorrow before the opening. That's SIRI, 20,000 of the February 550 puts. So obviously you can't lose too much buying a $10 put, because 10 cents times 100 shares is $100. Can't lose too much buying that. And is it somebody who's scared and wants protection into the earnings? Perhaps. Is it somebody that really thinks the earnings could be horrible? Perhaps. You got to decide. And these, both SIRI and Bristol Myers, are short-term trades. So be aware of that. They both expire this Friday, February 3rd. It's going to do it for us, folks. Thank you for joining. I hope some of you had AMD and Peloton, and I look forward to updating these three trades today: APO, Bristol Myers, BMY, and SIRI, SIRI, with you on tomorrow's broadcast. Thank you and have a great day.